Hello there, my friends. Chris Marcus here with you for Arcadia's weekly market wrap-up on Friday, October 26th of 2018. More comments this week out of Trump about the Federal Reserve, some thoughts on what could be happening there. A lot more down action in the market today. Let's take a quick look at this week rather, although certainly today as well. You see the Dow Jones down 300 points almost. 224,688, S&P 500 at 2658, and the NASDAQ at 7167. Wow, I hadn't realized how much the NASDAQ has gotten beaten up over the past couple of weeks. It was just over 8,000, so it's down quite a bit, 2% on the day. In Europe, the DAX down to 11,200. In Asia, Nikkei down a little bit, and closing at 21,184. Shanghai at 25.98. Look over at the oil market. Oil, as well as many other assets, has come down in the last 2 weeks. Here we see U.S. crude post third straight weekly loss, settling at 67.59. Now let's take a quick look at the metals. Again, not too much happened today. Gold closing the week at 12.36. Silver at 1482, and in the crypto market, again, sitting in that same range. Bitcoin still at 64.83, Litecoin 52.19. Been floating around there for a while. And the 10-year bond, where is our 10-year bond chart? That one. Let's pull that up. Yields were a bit lower on the 10-year chart. As you can see, down to 308, 4 basis points on the day. A bit in since the last couple of weeks where it was hovering around 320. So certainly seems like some people have been out buying treasuries in response to the stock market chaos, if you want to call it that. Certainly very volatile. I don't know if it's chaos yet, but maybe by the time Trump is done duking it out with the Federal Reserve, it will be here. Trump directly attacks Fed Chairman Powell, saying Obama had 0 interest rates, which is there a big difference between 0 and 2%? In the grand scheme of things, I would say no yet. Interesting how we've heard Trump attack the Fed before, a couple times during his tenure, and it seems as if things have stepped up in recent weeks. Again, on one hand, yes, he's correct. If the Fed raises rates, that's going to collapse the bubbles that are sitting out there. Of course, Trump also did run saying things about auditing the Fed and gold standard and the stock market's a bubble. And certainly now he's kind of saying the opposite of that, because if he doesn't want the Fed to raise interest rates, that means more money printing, which kind of goes contradiction with the other things we just mentioned. The president indicated that he sees the current performance of the economy as a competition between himself and President Barack Obama. And I'll just take a wild stab at this one. This is my own personal opinion and speculation. But given what I've seen out of the political system and the degree of manipulation I've seen in the financial system, certainly it is possible that the banks could be sitting there knowing that this thing's tumbling. You would think they have to. It's not rocket science. So the idea that things could be engineered enough that, all right, we know it's going to crash at some point, and is Trump getting out ahead and saying, look, it's that guy's fault. Again, to be clear, I'm not saying I have any evidence of that, but just in terms of pricing different probabilities, I would say there's certainly a non-zero probability of that being the case. Certainly it's not by any means, I wouldn't call that a favorite yet. You know, and when you have so much that on the surface of it makes no sense, again, launching a trade war against your largest creditor, and all the other things that are happening while the Fed continues to see no signs of concern. If they were raising interest rates and saying, well, it's the responsible thing to do because otherwise we blow out the currency, we realize there will be risks as that happens, then, you know, it would be a different story. But I'll just remind you that go Google the commentary from Bernanke and Hank Paulson leading up to the past crisis, where even as it was happening, They were saying, "Oh, nothing to see here." So, with that said, here was an interesting one. Paul Volcker, former Federal Reserve Chairman. It was an interesting article this week because, especially with the comments made by Donald Trump about the Fed, here Volcker, in his own memoirs, says he recounts being summoned to a meeting with President Ronald Reagan and James Baker, his chief of staff, in the president's library next to the Oval Office. Reagan didn't say a word, Mr. Volcker wrote. Instead, Baker delivered a message. The president is ordering you not to raise interest rates before the election. I was stunned, he wrote. I later surmised that the library location had been chosen. Unlike the Oval Office, it probably lacked a taping system. So, I can understand if you heard my speculation on the previous story and think, what's the basis for this? And again, that's just a feeling that I have. I'm not claiming that's fact, although to put it in perspective, here we're finding out another Federal Reserve Chairman was specifically ordered not to do something before the election, which is exactly what's coming up again now. So I guess more what I think would be appropriate to say is that I think it's common that these are the types of negotiations and deal making that goes on. And again, I just wonder if there's something wacky or similar like this happening now. Otherwise, I'll be fascinated to find out how some of the things that are happening are resolved, because at least on the surface of it, they seem bizarre to me. Although maybe the aliens are about to land, because Mitch McConnell says it out loud. Republicans are gunning for Social Security, Medicare, and Obamacare next. We have politicians actually talking about entitlements and cutting the benefits. Why is this important? Well, the publicly stated debt is about $21 trillion. Now, depending on whose numbers and assumptions you use, when you factor in the liabilities to Medicare and Social Security, that number grows as high as 100 trillion, 200 trillion. Nobody really knows for sure yet. In either case, either Congress has to admit the money isn't there, or again, there's already 800 reasons to be able to see why the U.S. Treasury is insolvent, but certainly if they plan on continuing to pay those benefits, where the money is going to come from remains a mystery outside the printing press. Yet at the same time, given our political system, I thought, we'd have cows flying across the street before Congress actually talking about cutting these benefits. Certainly not going to be a popular political stance, which is certainly unfortunate. And I'm not by any means saying this isn't a serious matter. Again, that's what I think is unfortunate about a lot of the way things have been set up, and that you have money that's been spent, whether it's stolen, spent, or wherever it is, it's not there to pay out these obligations. So at least, nothing else, if this leads to a discussion of, hey, there's some issues here we need to address, I would think that would be a good thing. And hopefully, just in time, if people want to respond by buying gold and silver, this video, as always, is sponsored by Miles Franklin. You can reach at milesfranklin.com online, or by calling 1-800-822-8080. So with that said, I hope you're going out, getting ready to have a great Halloween weekend. Hopefully you got a good costume. I'll be flying up to the Cambridge House Investment Conference in San Francisco Sunday and Monday. And then next week at the New Orleans Investment Conference. So if you're going to be there, come up and say hello. And as always, appreciate you watching. Hit the subscribe button, and I will see you next week.